I blew 48 funded accounts in a row trading the exact same strategy that I still trade today. And yeah, you probably have a strategy that works too, but somehow you keep blowing funded accounts over and over. This video isn't about giving you some new secret strategy that's all of a sudden going to change everything for you. It's simply about showing you that the strategy is not the problem, and this video is going to show you exactly what a rule-based system can do for you so you can stop self-sabotaging yourself when real money is on the line in trading. And by the end of this, I'm going to show you the exact mistake that 90% of traders are making when they're just trying to focus on the strategy part of trading and just end up in the exact same loop of blowing accounts. And when people are blowing accounts, the last thing that they think of is daily bias, but daily bias is actually literally the first thing of an actual rule-based system, and it is the foundation to be able to find A+ setups every single day. So when it comes to understanding market bias and daily bias on a high level, there's really only a few things I'm looking for, and I'm simply just going to give them to you guys. I'm going to put you guys on game. I'm looking for simply three main things. We're looking for a higher time frame trend and structure of the market. We're looking for our higher time frame fair value gaps and draws on liquidity or liquidity that has already been swept. And we're also just looking for our higher time frame equilibrium. And the reason why these three are so effective is because these follow the system. The system only allows me to look for these three things. But what do so many people do? So many people sit there and they just mark out every single confluence that they know and that they've learned on the charts. And that is the worst thing you could ever do when it comes to trying to actually mark out a daily bias. Because there is endless reasons of why you will never ever come out of the market with the right bias if you're marking every single thing you see. And I never even realized how strict I actually am on just these three things in these groups until it was kind of funny that my students were saying they noticed how much I was actually hating on the fact of marking out every single freaking confluence there is on the higher time frame chart and trying to find bias that way. And the reason I hate on it so much is simply because people just mark out every fair value gap, every draw, every trend, everything just because they learned it and they want to feel smart marking out certain things on the chart when that's not actually going to get you the correct bias. So how can we actually just convert these three rules onto the actual charts? You can see what overall in the long time frame, we're on the 4 hour, there is a downtrend here, but what do? We day trade, so we are within the day. We're looking to see what's happening now. So you can see what? You can see what is our trend in our structure. Yeah, we are pushing down, but we are showing a very big rally with a lot of 4 hour candles pushing strictly straight bullish. So instantly, our first thing is telling us bullish. It's as clear as day. Next, what do we have? We have fair value gaps and we have liquidity. What can I see? If we look on the 4 hour time frame, literally this is going into market open, right? Daily bias, we have a 4 hour gap right here. That's done what? We've pulled back to it and we've respected it and we're pushing up, right? We are continuing this trend to the upside. Also, you can clearly see that this whole leg down, we had to have done something to be able to get this rejection to show us that we're starting to push up. And what can you see? You can see that we swept out all of this liquidity resting within here. This is a ginormous accumulation and we just swept all that and we're starting to rally up. So what is that? Bang, that's another thing now that's telling us bullish. And what's the last thing we have marked out? It is simply higher time frame equilibrium. So you can see this whole 4 hour trend. What are we looking like right now? Clearly you can see we have not pulled back to equilibrium at all, but this is a ginormous range, right? This is a range that is going about 1,000 points. So you can't expect every 4 hour and ginormous range to pull back exactly to equilibrium. This is where we can scale down to the 1 hour time frame too, because the 1 hour and the 4 hour are both higher time frames that we look for these confluences on. And what can you see here on the 1 hour? You can clearly see that we are pushing up, and what have we done? We've made another little 1 hour range. So from this low down here to this high up here, this is our 1 hour range that we just put in. What can you clearly see? You can see that we pulled back and tapped up the equilibrium line. So once again, what do we have? We have another thing that simply just checked off bullish. So we have now three things from our actual rule-based system. We just found three things that tell us bullish. So we would be absolutely so fucking stupid to not look bullish on the day. And here, this is a completely different day, but I just want to show you guys also an opposite of this, of what a lot of people would do and where people get bias wrong. So looking at this, people look at this and see just hard downtrend, and what do they see? They see that we're filling a 4-hour gap and that we're rejecting out of it coming into market open. So most people are going to look at this and kind of think bearish to continue this trend and continue to push down and reject out of this 4-hour gap. And what else do they see? People simply like to mark out every single thing on the chart, right? Look, there's an order block right here. We're tapping into the order block on and on and on, down the 1 hour time frame, 15, on and on. But why are they wrong here? Because you need to look at the 3 things that we talk about. You need to continue to just dissect this. What can you see? 1, we swept this liquidity over here. We're clearly starting to push up. We're seeing volume. Yes, there is a 4-hour gap in the way, but what else can we see? If we were to mark out our equilibrium of this 4-hour range, we can see that we're clearly blowing through equilibrium. We've pushed all the way through equilibrium. That's going to want us to continue to push up. And what else do we have? We simply have this box I marked out right here. This is a daily bearish fair value gap that is unfilled. So we're clearly pushing up. This is a strong draw on liquidity. We're going to want to target this daily gap. So the people who are looking at just this 4-hour gap, this order block, on, and want to look short, they're going to miss out on the fact that there's a daily imbalance right here that wants to get filled. We already pushed through equilibrium. We're already sweeping all these lows over here. So there's just main things that you need to stick to, and this is how you can get your bias right from wrong. Now, once we have our bias, which is what? Bullish, it's simply this rule-based system kind of goes down in steps, and you're going to see, as what did I say earlier? The bias is simply just that first main part. It's that foundation. And what is the second thing that we look for, right? Coming into market open, bang, we're bullish. So what do we need to mark out now? We need to mark out what our draws on liquidity are for today and exactly what we want to target higher when the market is pushing up. Because clearly, our bias is bullish. We want to catch a trade going to the upside, but we need to know where the fuck we want to target to be able to have a good target of where price actually wants to go for the day. So when it comes down to how I actually mark out my draws on liquidity of where I want price to go and where I think it's going to go for the day, I simply look for our pre-market highs and lows, London highs and lows, Asia highs and lows, and then previous day highs and lows, as these are all the draws on liquidity that get ran and that get targeted in New York AM session. Breaking this down, what can we see? We have a pre-market high resting right here. This is at 6:15 for me. I am in the West Coast, so market opens at 7:30. So that's a pre-market high. What can we see down here? This right here is a London low. This is at 3:30. So why am I marking out this London low? Our bias is bullish because what could we see happen? Maybe price wants to come down, sweep London low, and then push to our target. So I'm always marking out highs and lows of where I want to target. Maybe I want to target this pre-market high, but maybe we need to take out this London low in order to get to that pre-market high. So it goes both ways. Continuing on, what do we have? Right here at 1 o'clock, this is the open of London session. So we have London session high right here, and then we simply have Asian session high all the way up here. So these are my main draws on liquidity for the day. We mark out these exact draws on liquidity that the system tells us to because it gives us our exact targets for the day and where the market actually wants to go. And this is something that is clearly, obviously essential every single morning when it comes to trading. When New York opens, you want to know where the market is most likely going to go. And if you want to see this stuff live, I will be posting tons of trade recaps on my other YouTube channel, so feel free to go and check that out. The link will be in the description. And once we actually have our draws on liquidity marked out now, I kind of want you to run through a few situations. What could happen when market opens? We could either push straight to our draws on liquidity and we look long right away, or we possibly come down, take out this draw on liquidity, London low, and then push higher. So then we know what we're looking for throughout the day, and we're not just sitting there in the blind watching candles move. We got our bias, we got our targets, we know what we want price to see do at market open. So now it's just simply how are we going to find a trade that delivers to our draws on liquidity? We're simply looking for a higher time frame confluence, which is we're looking for a 4-hour, 1 hour, or a 15 either fair value gap get filled or get inversed. We're looking for a low or a high, some liquidity to get swept, or maybe some liquidity to target. And we're looking for equilibrium to maybe get hit or to get disrespected. So with this example, the only really confluences I'm seeing of what could happen out of market open is really one, obviously this gray box right here. What is that? That's that 4-hour gap that we're already delivering out of. So we already have a 4-hour gap, but there really is no 1 hour or 15-minute gaps within this little range here that we could look for price to pull back to. So what does that bring me to? That brings me to liquidity. We have a little 15-minute pre-market low resting within here, and then obviously we still have our London low right here, which is a 1 hour and a 15-minute low. And then lastly, equilibrium. What does equilibrium look like? Right now, equilibrium is just about to get hit. So how can we use this to our advantage? What can we want to see out of market open? Maybe we pull back to equilibrium, fill orders, and run straight to our target. Bang, that's how we can look for our entry. Or maybe equilibrium ends up getting disrespected, which does happen, but what does it do? It pushes down and either sweeps out this low, pushes up, or comes down, sweeps out this low, retaps that 4 hour, and then we look to target our draws on liquidity. So that's just a few tips of what we could maybe look for today out of market open to hit our draws on liquidity, but there's so much more tips and good stuff to know exactly where price wants to go and exactly what draw on liquidity we're gonna hit. But I simply do keep that strictly for my one-on-one students because that is literally the sauce of how the market moves out of open and how we catch our exact trades every single day. So if you are interested in that, you can check out the first link in the description below for my absolute full one-on-one program. It will be the first link in the description below. I scaled down to the 5-minute time frame, and what can you see? Literally that first 5-minute candle out of market open. What do? We pushed down, took out this pre-market low, pushed even farther, took out that London low, and look at this fucking wick that we created. If this isn't screaming absolutely freaking bullish, I don't know what the fuck is. So with this example today, what can we see? We can see that the bias is 100% playing out, and those two things that we looked for out of market open are working. It came down, took out this low, swept our draw on liquidity, right? That was one of our confluences, was a sweep of liquidity. We got that. Now we are pushing up and our bias is confirmed. We should be looking bullish no matter what. And what does that mean for us? That means now look for our entry, look for our bullish entry as fast as we can because our bias is right. All of our analysis we just did is right. Now we want to get into this trade and we want to be able to catch a trade that targets and hits our targets and our draw on liquidity that we marked out earlier. We do not want to be the people that miss out on this entire move because one, they just didn't see it, and two, maybe they had too much shit marked out on their charts trying to form a daily bias and trying to find where the market wanted to go on the day. So what is our actual entry confirmation? Our entry confirmations are either an inverse fair value gap or a change in the state of delivery. So you can see right here, what do we have? We have an inverse, or we have not an inverse fair value gap yet, but we have a fair value gap that's going the opposite direction, and we have a level right here, which would be where we look for a CISD. For me, I use inverse fair value gaps a lot because look, you can see clearly in this example, they tend to happen before changes in the state of delivery. So it's just giving us a better entry all around to be able to get a better risk to reward up to our actual target. So I played out 2 candles. 2 minutes later, what can you see? You can see we clearly inverse that gap to the upside with a very strong bottom wick. This is screaming volume to the upside. And that's also after a top wick. This top wick should have pushed us down if we wanted to respect this 1 minute gap, but we did not. So what are we doing? We're entering, bang, right on the close of that inverse gap. Where our stops? My stops are going to be at this wick. This was the last volatile wick, and it is at the bottom of the 3 candle sequence that created the inverse fair value gap. And then where are our targets? We already marked out our targets, so it doesn't get any harder than this. What do we have resting right here? This is our pre-market high. What does that give us? That gives us a 1.79 risk to reward. And then we have what? This was our London high resting over here. That gives us what? A 2.79 risk to reward. And then obviously we have the Asia high all the way up here. Yes, you could target this. This is a home run ass trade. This is a 5 risk to reward, but simply I don't need to target that much. So pretty much every single day I would target either this London high or I would target this pre-market high. So in this example, I'm going to target this London high, but I will be taking to take profits. There's no reason to not take a profit at this pre-market high and try and hold all the way to this London high. It makes no sense. And it's really just as simple as letting the trade play out. You see, bang, we hit first take profit, and bang, second take profit ended up smacking. So it is perfect. Our bias played out perfectly. Our draws on liquidity, our targets played out absolutely perfectly. As you can see, first target got ran, saw a rejection, bang, right to our second target. So this is perfect analysis. We did what? We knew what price maybe wanted to do out of open and maybe wanted to come down, sweep this low, push up. Once we saw that, now we already knew our game plan. Now it was just as simple as look for our entry confirmation, and that was it right there. 1 minute inverse fair value gap, and we catch the entire trade. This is what happens when you actually follow a rule-based system. It takes you from the foundation all the way up, from bias to entry to us hitting TP. I want to show you guys just once again what happens when you follow the rule-based system and when you don't, right? Remember, this was our bad example of when some people would look bearish out of this when everything was telling us bullish. So what clearly happens when we look bearish, right? We had this 4-hour fair value gap resting above that we wanted to see price react out of. So you can see that clearly what did we do? We're sweeping these draws on liquidity. We just pushed above these highs. We tapped into this 4-hour fair value gap. So now most people are going to want to look to take that short to do what? Remember, target those lows down here that we marked out. So what can we see happen? If we play this out, you can see we are filling the 4-hour gap. What do they want to see? Bang, they want to see a rejection out of it. What did that rejection just do? It inversed this fair value gap resting right here, and it inversed this fair value gap resting right here. So it just pieced up 2 fair value gaps. What are these people going to do? They're going to bite on that shit. They're going to instantly enter, stops at the highs, and then once again, where was their targets? They'd probably target this low right here and then maybe target back down to here. So bang, what do? Play this out. Looks good on book. You're rejecting out of a 4-hour gap, right? Rejecting out of a 4-hour gap just took out these highs. This looks like a good setup right here on the short term. And what can we see happen? They get stopped out in literally 3 minutes, and now they are revenge trading. They're blowing more accounts. Probably you have done this before, because I used to do this exact same thing back in the day. Why did this trade not play out? It's a beautiful 4-hour gap, high time frame. It's because you didn't follow a rule-based system and you didn't start from bias up, right? Their bias was already fucked up at the start when it came to the fact of this 4-hour gap. And what did that end up resulting in? It resulted in them getting absolutely fried and just straight barbecue chicken in a trade. Like, they got stopped out instantly, and that is triggering revenge trading and blowing accounts instantly. That's why I can't stress enough how important it is to actually follow a rule-based system, because that makes the strategy. The rule-based system and the rules that are put in place makes the system, makes the strategy, and gives us what? It gives us trades that play out, because we didn't have to sit there and fight with our mind all day in the markets. We simply just had to watch and wait for what the system and what the rules told us to do. We knew that it wanted to take out this, and we knew it wanted to hit these highs on the day. So we just simply had to sit there and wait for it to happen and then enter. It doesn't get easier than that. Trading should not be hard every single day. And that's how trading used to be for me. And that's what my students used to say before they joined with me, is that they pulled up to the market and it was hard and they were looking for shit all day, until you can actually implement a rule-based system, and then it just happens in front of your eyes and you already know what you're looking for. So you're not sitting there trying to force trades, trying to force entries. You just wait for the entry and what the system wants you to enter on and what it wants to see. So as you're going through this process, I want to make it extremely clear that if you want the accountability, the resources, the tools, and you don't want to spend any money, make sure you go watch a fuck ton of my YouTube videos. I'm going to be posting so many coming up on this YouTube channel and on my other YouTube channel that will be in the link in the description below. But if you want to kick it up a notch and get the full power of what I can actually teach you as a trader and get the stuff that I'm not putting out on YouTube, you can click the link in the description below for my one-on-one mentorship. And it's for traders who are struggling to scale to consistent payouts and actually finally want to see a consistent income with prop firms and with trading. Once again, if you made it to the end of this video, I thank you so much. If you could like and subscribe, that would be greatly appreciated. Leave a comment of what you possibly want to see a next video about, or any questions you have. So with that, I hope you guys enjoyed this video, and I will catch you guys in the next one. Peace out and trade safe.